Well, first off, I think it's a good report. I think the IMF caught all the important issues on that. 2.1% is about where everyone thinks we're going to grow coming out of the recession. We know, because we've talked about it before, it's not good enough because our population is growing at almost 3%. But I think what the report highlights is that the really hard work of getting the economy going is not simple. I mean, these structural reforms take a lot of time to implement. The efforts on increasing taxes, there is a lot of effort, but it hasn't yet turned up into the numbers, and that's what they're highlighting for us.
Now, it's really very important, like you talked about, efforts have been made, but then it's yet to turn up the numbers. What do we need to do to accelerate these numbers, or accelerate the progress that we need urgently, clearly, according to this report?
Well, I think what's happening in the country is that there are places where there's some people who are really focused on getting the right things done. So, for example, Lagos State has really moved ahead a lot of critical reforms. There's some governors doing that. In the federal government, there's some pockets. The PEBIC group, for example, the Minister of Industry, Trade and Investment is focused. But I think we don't have everyone quite on side to realize how critical this is. I mean, if we're not growing at 6 or 7%, we're going to have massive problems. I mean, according to the IMF, we're going to only grow 1.9% in 2019. So that will be another year below population growth. So we will have gone 5 years with declining income per capita, and that's not sustainable. So we need everyone in the country and every governor pulling in the same direction to make this a place where we have inclusive economic growth.
We're talking about inclusive economic growth. So far, the MPC is yet to sit this year. One of the recommendations by the IMF is that the central bank should continue its tightening stance from 2017 into 2018 until inflation reaches a single-digit level. But then we're talking about kickstarting the economy. We're talking about ensuring that small businesses are back and thriving as well. How do we balance this out, really?
Well, we've said before from PWC viewpoint that the problem is really one of the tax collection. I mean, the reason that we have this issue is we're going to have a deficit of 3 trillion naira. It isn't that we spend so much, so we don't collect enough taxes. And so that's got to be accelerated, and that will also bring down the interest rates, because then what's crowding out private investment is the fact the federal government needs 3 trillion naira out of the system. So again, it comes back to that tax collection is kind of a little bit the litmus. But on the MPC, I think it's worth noting, again, this sort of shows maybe we don't have the sense of urgency throughout the country, right? Because we're holding up these appointments because of a dispute between the federal government and the Senate over the acting EFCC head. That's a critical issue, but we're now holding up entire economic policy as a result of that. Is that in the best interest of the country? I think people should ask themselves that.
But do you think people actually realize it's really important that the MPC meets? Because there are those who say, just like you said, I really don't get that sense of urgency or sense of importance when it comes to, the MPC meeting or forming a quorum, as long as, of course, certain policies can still take place without them having to come together to agree. How significant is it to really have that quorum formed like yesterday?
Well, we can't move the interest rate without a quorum. So it effectively means they have no control over the policy. If we want to tighten and we want to loosen, some people say 14% should be coming down to 12%, but actually there's no legal basis to do that because we don't have an MPC quorum. But in addition, and I'm sure there are other places in the government with this issue, but at the CBN we have the deputy governor, the one, Aisha Ahmed, who's replacing Dr. Sarah Lade, who is still in limbo. So that is the policy unit of the CBN. It's not producing what it needs to do. So this refusal to confirm appointments of the presidency is really causing trouble.
Let's talk about development, of course, in the FX space. What would you make of what's playing out at the moment? Of course, the CBN every day clearly shows the fact that it can sustain the inflow of the dollar into that particular space. The hike in oil prices as well. I mean, it looks good for the economy at the moment. But then what do you foresee? Are we on track on this in terms of the dollar, or do you think it's about time we just let the true value of the dollar come through?
Well, we've made a lot of progress on having a more flexible exchange rate in the last year. The ERGP says we want to move to market-based exchange rates. We seem to be going a little bit slowly at the CBN, where we still have the multiple rates. I mean, we have the 305 official rate. We have the investors and importers window at 360. I mean, obviously, the central bank is controlling the currency at 360 because that's why the reserves are increasing, right? Because they're effectively sterilizing it to keep it at 360, because it would otherwise appreciate. It would come down to 350, 340, 330 because we're running a big current account surplus again. Our view has always been that we'd like to see flexible exchange rates. It's confusing to outside investors to have this. I think we'll get there, but we seem to be going very slowly. And the longer we accumulate reserves, we get to 50 billion, 60 billion, do we really need to stick to this 305 official rate? And at the end of the day, we're only going to be a strong economy if people want Naira. And people are only going to want Naira if they can go in and out of Naira. So we've got to get there. I hope it's sooner rather than later.